Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Everyone checking in on the market. So we had an inside bar on the daily time frame with a tightening range for SPY, and we have the daily lower Bollinger Band rejecting the high of the day the last 2 days in a row. So that's going to continue dropping down pretty rapidly each morning. I update this chart and make note of where that level is, and it will fluctuate a little bit depending on what the price action is doing, but it's a good general guide. As we know, we're not going to get any bounce follow through until that level is support. So that's going to drop down even further on Monday. That's probably going to be around the low 275s, and we'll look to see if the bulls can close over that level and see a bull break of 277.09 to break that inside bar bullish. So heading into the day on Friday, it was a fairly easy setup on the hourly time frame for the S&P 500. So here on SPY, this is the pre-market starting action. So we'll do this now candle by candle as it plays out. So we started pre-market and saw that, okay, we're not breaking the high of yesterday, and we need to be watching for the potential that a lower high is going to form, because this bounce is essentially coming straight off of that low, and we are looking for the potential of that lower high. So then pre-market, we started to see a bit of resistance from under that 278.90 resistance level, and then we started to head into the open. So at the open, I said, if we lose this low of pre-market, that is going to increase the odds significantly that we are going to see an hourly lower high and then an hourly higher low for an equilibrium. So we broke the low of pre-market, we started pulling back, and then we saw the trend change on the 15-minute time frame. And again, I've been using the 15-minute time frame as my guide the last couple of days, and that told us when the bounce was for real. We had our low, high, higher low, lower high, lower low, almost broke the low of the day, and as soon as we broke the lower highs here towards the end of the day, that was the signal to me, okay, our hourly higher low is now established. We're changing the trend on the 15-minute time frame, and we're looking for the hourly equilibrium. So now here at the end of the day and into extended hours, we're almost breaking the high of Friday, but we have to see it happen during regular trading. When levels break during extended hours, I definitely make note of it, but I take it with a grain of salt because I have to see those same levels break when the volume is for real. So 277.32 breaking is a clear bull break for me on the hourly time frame, shifting the trend. And this is also an inverse head and shoulders pattern where you have your left shoulder, there's your head, there's your right shoulder, and this is the neckline, giving you the change in trend from lower highs and lower lows to a higher low for the right shoulder, and then the break of the neckline is a higher high. So we're on the verge of this neckline. We're going to test it Monday and potentially start the day over it, but again, we need to see it hold it during regular trading because all of that market action, all of that bullish strength that we saw in extended hours Thursday afternoon and Friday morning, that was seen with profit taking first thing Friday morning when the volume was for real. So volume is our proven indicator, and we have to see the bulls buying on a break of 277.32 Monday during regular trading. 278.90 is after that. Clear those two levels. Look at all the space the bulls have to work with. That's when the bounce is for real, and that's when the bulls are going to get some significant follow through. IWM on the daily chart still trying to bounce. Lower highs and lower lows on the daily charts continue. 17 RSI, so getting pretty extended. But I'm watching the shorter term time frames here as well, just like everybody else. Anything under 155.92 is just a lower high. The bulls have to break that pattern in order to see a change in trend on the hourly time frame. So anything under that is just a lower high. Then we need the higher low and higher high for a bull break. There's a possibility that we're one step behind the S&P 500 here, and looking at this as the left shoulder, the head. If we're unable to break that resistance and we pull back and form a right shoulder, and then we'll be watching for the potential of this head and shoulders, inverse head and shoulders reversal pattern. So IWM, still no sign of a bounce. The weekly chart closed very weak on high bear volume, and a ways to go to try and change that hourly time frame. QQQ got a more significant bounce. So the hourly time frame is different here for the tech sector, and most individual tech names, Amazon, Facebook, Google, all those names, and I know some of those are now communication names, but a lot of those names have a different hourly setup because of this strength, and it was the financial sector that prevented the S&P 500 from seeing this same setup. So we changed the hourly trend on these tech names, higher lows and now higher highs, And the resistance level I'm looking at is 176.34. And after that, we're looking back up at 179.87. So as far as we're concerned, the bounce in the tech sector is absolutely underway. Here it is on the 4-hour time frame and again on the daily chart. But we have to remind ourselves these daily charts are going to set lower highs. So anything at this point on the daily chart under this resistance level of 181.02, which was our last bear flag, anything under 181.02 is just a lower high. You can see this bounce at this point from the low to the high is already more significant than this previous bear flag, but we know a lower high is going to come. If we lose the hourly uptrend, that's the signal to me that the lower high has been set. And in order to see a significant bounce on the daily chart get follow through, we have to set the lower high, consolidate for the higher low, and then break to the higher high. So change the trend on the hourly time frame, and that's going to give us the bounce that's for real. So watch the hourly chart for a guide on what to anticipate, or I should say for clues to give us the follow through on what we are anticipating to happen on the longer term time frames. XLF. So XLF on the daily chart, you can see it was weaker. We're still seeing the inability to get any follow through on this bounce. So we look at the 4-hour time or the hourly time frame, and we can see that it's just lower highs and lower lows still at this point. So a key resistance level for me, I'm watching a lower high at 27.10. Pretty much anything under 27.10 is an hourly lower high. So we're going to look for a lower high to be set. And again, it's that same less developed inverse head and shoulders pattern that we're watching on SPY to potentially get follow through. So wherever we set this lower high, we'll then look to consolidate, form the higher low, and then see if the bulls can get that breakout. So similar pattern on XLF, similar pattern on everything. It's just they're a little bit more developed in the tech sector. So it's tech sector strongest, SPY is in the middle of the road, financial sector is weaker, and obviously that makes sense as those are the two biggest sectors that have weight in the S&P 500. And last, we'll wrap it up with VIX. So VIX with an inside bar, but obviously a lot of profit taking. Some shorts are piling into VIX at this point because these bounces and these big bull moves do not last more than a few weeks generally. So the last major move in February, 2 huge weeks. We already have 2 big weeks at this point. The question is, do the bulls in the volatility index, are they able to see further follow through? So again, I look for the hourly time frame and I can see the regular old head and shoulders pattern here. And we have the left shoulder, the head, the right shoulder, and we're breaking the neckline of support. 2117, it broke at the end of the day, and after 2117 is 2065. That's an important level because if 2065 breaks, there's no support nearby. You can see we just ran straight up from the $16 level, so there's a void of support below 2065, and you can look at all of these tickers. TVIX must hold 3768. We have not confirmed the loss of the higher low pattern yet on TVIX. It's still an equilibrium on the hourly chart, and the head and shoulders pattern has not confirmed yet, but 3768 is the most important level for me, and here it's 4916 on UVXY. Same story. It's a tightening pattern. We have not changed the trend yet on the hourly chart, and it will require an inside bar bear break on Monday in order to see significant pullback and to see the shorts in the volatility index get their payday. So I appreciate you watching. There's still a lot to be watching into next week, expecting that volatility to continue. But again, it's recognizing the most likely scenarios on the daily and hourly time frames, and then looking for the details on the shorter term time frames to tell us that that is indeed what is following through. So we'll see you next time. Have a good weekend.